All right, everybody, happy February 1st, 2026. It is time for this week's Market Snapshot, what's happened in the last 7 days in the Northern Virginia real estate market in under 5 minutes. Here we go. Okay, so it has been a unique last couple weeks with the market. We've seen a lot of snow come in, a lot of ice, a lot of road closures. So there's been a flux in activity. Was actually out showing properties yesterday. We went and looked at 5 different properties, and 2 of those we had to very cautiously and carefully navigate the front yard with the icy covering that was what they're calling now snowcrete. It was the frozen snow that had turned to ice, and some of the sellers and some of the owners haven't been able to get those properties shoveled appropriately yet. So it's a little bit risky out there showing properties right now. But anyway, so let's see how this weather has affected the market, what's been going on, and just dive into the numbers. Okay, so as always, our black line here is the buyer activity, which indicates the demand. This is the properties that went under contract. And just a reminder for those that are new to this weekly market report, for the weekly market report, we use what are called lead measures. We don't use sold data because sold data can be up to 75 days old, which doesn't give us real-time knowledge to be able to respond appropriately in the market. So for the weekly market report, this market snapshot, we use what's called lead measures. So for the demand, we use the under contract information, the properties that went under contract in the last 7 days. And for the supply aspect, we use the properties that came onto the market or the new inventory. So those are our lead measures to let us know what is happening activity-wise, so that when we go out and we're looking at properties, writing offers or receiving offers, we can respond appropriately. So the under contract, the black line, that's the buyer activity or demand. And you can see it's been on a downswing the last 2 weeks. Part of that is because of the decrease in inventory. The other part of that is because of the weather. It's been very difficult to get out and show properties. We finally started getting out about 3 days ago, so we're starting to see that activity picking back up again. On the inventory side or the supply side, you can see the inventory has been ticking up. And then last week, again, with the weather, we saw a sharp decrease in new listings. But the difference here is the buyer activity decreased to this level, inventory decreased to this level, so the demand was much higher than the supply. So when we go down here to our seller's market versus buyer's market, again, the small gray line in the middle is a neutral market. Anything above that line is a seller's market, anything below that line is a buyer's market. So you can see that we have been, we took a strong dip right around the beginning of the year, which we always do. But since then, we've been steadily increasing into that seller's market. So we are anticipating a strong spring market this year with a lot of activity, a lot of inventory, and a lot of buyers coming into the market. But let's see what the contracts have been doing, because that's what really matters. What matters is, number one, what the prices are doing, and we are seeing the prices going up. But then the other thing that matters is how much competition is there. And we can tell that by what contingencies are showing up in contracts, because if you are in a high competitive situation, you're going to see fewer and fewer contingencies showing up. So in the last report that we had, which was the 20th through the 26th of January, you can see that 41% of the properties went higher than list price. That is the highest number in at least 6 months. Another 26 went at list price. So that's 67% of the properties are going at or above listing price, and you can see 33% have gone below listing price. So this number has decreased dramatically in the last couple weeks, while this number has increased significantly. So we're seeing that we're getting a lot more demand, probably multiple offer situations where the properties are going above asking price. If you look at, days on market, you can see that 48% of the properties went within the first 7 days. Again, this number is increasing again. 22% went between 8 and 21 days, and then 31% went 22 days and over. Now, what we are seeing now, which is what we saw previously in the high demand sellers market, is this number of the properties that go over 22 days usually matches closely to this number of the properties that went lower than list price. So what that means is, as a seller, you have to, that first 2 weeks is going to be really, really important. In this case, first 3 weeks is going to be really, really important, because if you hit that 22-day plus, you're likely going to get a lower offer on your property. So you have to price it appropriately, you have to make sure it's staged appropriately, and then make sure that the condition matches the price you're trying to get, so that you don't sink into that bottom 33% and end up getting below list price offers. Buyers, for you out there, when you see a property you like, get in there and look at it quickly. Get prepared to go in there and compete strongly. We just had some buyers that won a property against 7 offers, and it was very quick. We had the offer deadline. It came on a Thursday. The offer deadline was Sunday by noon, because the offers had started piling in. Fortunately, our buyers made a really strong offer and they won the property. So just be prepared for that. We're getting back into that market. But the good thing is that there's still about 3/4 of the people are getting their finance contingencies and their appraisal contingencies. As we get into the spring market, I expect to see that number going down. But right now, finance and appraisal contingencies are still being accepted on those offers for the most part. But we are starting to see the inspection contingencies trending downward. This is one that's huge, because as we get into more competition, that inspection contingency is the first thing that's going to go. So make sure that you, as a buyer, get with your realtor and figure out your strategy on what you're going to do to make sure that the property is in good condition and that you know what you're getting in the event that you can't have an inspection contingency on the contract. There are ways around that to make sure that you're still getting protected, and our buyers use that technique on this deal, so they were able to offer a contingency-free, clean offer, but they still had all their protections in place. Okay, if you have any questions about this, please feel free to reach out to Kelly and me. Our number is 703-783-2143, and we will see you guys on next week's Market Snapshot. Have a great day.